Hi everyone, Jose Farouk speaking here with Trade Simple, and thank you for watching our promo video. This video is to show you what the Trade Simple Hill Cycle strategy and indicators are about and how to trade them. With the Hill Cycle strategy, you have three particular ways to trade this trade, and we're going to go through all three methods using this chart here for crude oil on a 10-minute. As you can see, this is March 23rd, and the way we trade this is, first way to trade it is by using the hills, and this is called the downward or upward hill, and you'll see what I mean by that in a second. Basically, what you want to do is take momentum trades to the downside. So when you reach a peak like that and the bars start going smaller and it starts changing color, that's when you want to take a trade. To reach the peak right here, when the bars start getting bigger, you want to take a trade to the now this is a counter trend strategy, so make sure you understand that you should take it only if price action agrees, and don't take it otherwise. We only trade between 8 and 1 o'clock, so don't try not to take trades any later or earlier than that. So this is a very accurate strategy that will show you how to take trades on the downside. Now, in this particular case, let's take you through a few examples of how this trade works, and we'll get going with the second way to trade this as well. So as you can see, when at 8 o'clock, when this happened, now this is another way we have called is another strategy we have called is a cross value. Now this is the rules that you get when you join our program, are the different rules and entries that you use to start. So downward hill is the first one we went through, and let me just reiterate the rules. When you reach a hill, and as you can see, this indicator bar goes from big to small and it turns green at the close of this candle, and boom, off you go. Now the way that we have our settings is that we calculate not on the bar close, we calculate and the bar turns green or red when it is in the middle of price action, so you're ready for what to do next while the price is still moving. So that's a very good thing to do. You want to take it anywhere 1 to 4 ticks below or above the close of the last candle. So in this case it would be 46, and pretty much right on the next candle you would have had your profit target here, and if not, you would have had it right here, and your stop would be right here. Another trade, an obvious trade, is you can either do this one. This is a little risky just because the bars are closer to this line here. The farther away it is, the better and more probability there is. In this particular case, you would have taken a trade right here. As you can see from this candle, that would have been at this point right here, at this candle right here, and you would have taken to the downside for your 10 ticks right there. Okay, your stop loss would have been anywhere over here. This is too tight of a stop loss. I would have given it more room, because as you know, when you go through our training courses, you understand how institutions work and how they will trigger your stop loss, which is why it's dangerous to have a small stop loss even when you're scalping. Leave some room, because institutional traders understand and know that you have a stop loss there, and they could take it out before driving the price back down. And that's what we teach you in our courses, and that's what you should feel confident about Trade Simple, is we have over 15 years of experience, combined experience in trading. We made millions of dollars in the market, and we continue to trade futures and forex every single day, and now we've developed products and services that we can bring to the market for the simplicity of your trading and add an extra tool to your system. Another trade we have is called the cross valley. Now the cross valley is basically when the price goes from crosses this zero line right here. Now there are certain rules in place to stop you from losing trades, but in particular there are a few ways that you can trade this. For example, your first trade would have been somewhere around here or here, depending on which bar you felt comfortable. The bigger the bar, the better it is. So let's just say you took it right here, and your stop loss would have been somewhere over here, probably over here, just because it's the last support point right here, and you would have gone in for 10 ticks and would have been a winner right here. Now these bars are not big enough for it to be qualified as a trade. Even though it would have won, these bars are not big enough and wouldn't qualify. These bars, when this crosses, the bars get bigger right here, and this is probably where you want to take a trade, because the bars are big enough for you to feel confident this might go down up to the last support zone, which is here, and as you can see it did, and you would have had your 10 ticks. Now remember folks, we only trade 10 ticks and we are out of the game for the day. We do not want to trade any more than that. Another trade right here, look, it caught a very big move upside and these moves will come and go, so make sure you take advantage of this using this system. Let's go through quickly another day, and as you can see here, we have another trade called the strong hill, and what that means is a continuation hill, continuation pattern. What that means is when you're above the EMA and the price goes down when it's above, and then it continues going upward again, so it goes from small, small, big, as you can see from where my arrow is. That's when you know this thing is going to go up, but you want it to get visibly bigger, so you probably want to take the trade around these bars right here, and you take a trade here, let's say for example at 32, and you're way above your 42 target right here, so you just have to wait for a couple of ticks and you're in and out of the trade very easily, and your stop is safely tucked in right under here. So that's just one trade. You have a hill trade right here to the downside for 10 ticks right here. You have a hill trade right here for 10 ticks like there, and you have another continuation trade right here to the upside for 10 ticks. And you have any more, you also have a cross valley right here. Take a trade to the downside 38 to 28 and you would have been good, but this is late in the day, we wouldn't have taken any trades there. Hopefully you enjoyed this video and you find that the hill cycle is a indicator on a strategy that could fit your portfolio, and if it is, don't hesitate to contact us, don't hesitate to join Trade Simple. Thank you very much for watching and have yourself a great day.